One of the greatest advantages of my trading strategy that I've come to discover over time is the use and the incorporation of Bollinger Band. The Bollinger Band you are seeing on this chart is not your regular trading Bollinger Band. And as you can see the setting, this Bollinger Band is period 130, the deviation is 2.0, shift is 0, and you apply it to your close. Now I want to talk basically only on this Bollinger Band. It is important for you to know that Bollinger Band serves as your dynamic support and resistance, and as such this Bollinger Band help you to predict the directional bias of the market. And what that means is that as far as trading is concerned, when price moves from the lower Bollinger Band, just as you are seeing here, you can see that price has been hanging around this lower Bollinger Band for a very long time. And afterwards, once price gets back into this lower Bollinger Band, which is being rejected from this lower Bollinger Band, this rejection process is what we call a support. Once price is rejected from it, the next thing you should be targeting, price gets rejected from this lower Bollinger Band, closes above this moving average 25. The method is exponential, while the other one is moving average 10 and it is still exponential. So immediately price closes above those moving average, you should be targeting your buy entry, because price leaving this zone, remember, don't just buy, there are other conditions that need to follow. So whenever price leave this zone, your next target, rejection from the lower Bollinger Band, is to the upper Bollinger Band. This is how price works, and immediately you see price moving in that direction, kindly pick up your trend line and connect it this way. It is not a magic that price has been expecting this that you are seeing. So once this happens, it is important you allow price to do its things. You see that price has been respecting the moving average and the trend line respectively. And when price comes to this middle Bollinger Band, we are expecting a two scenario, either to get resisted and continue to the downside, or it should break through it. And when price break through it, price will not go to the upper Bollinger Band immediately. There will always be a signal, and one of those signals, remember, you have your trend line connected. So for price to move in that direction continuously, it means that your trend line has to be respected. So there is a tendency price will come, retest this move, this middle Bollinger Band, give you a bullish confirmation signal, or retest your trend line, give you a bullish confirmation signal. While that is happening, your commodity channel index is as well validating the signal, crossing to the upside from this level of 10 and 20. And that with your price action, which is the candlestick formation, you are good to go, making your entry strictly on H1. And coming here, look at what happened. Price left the upper Bollinger Band. You can see this. And I always tell people, if you want to get a confirmation from the upper Bollinger Band, it means you want to trade a reversal. For this reversal, always wait to get a chart pattern, which is your M pattern for a sell and your W pattern for a buy. And look at this, we have this pattern being formed, and at times you will have a divergence as your conference. So look at what happened. Price came here, hit on it, price came, went back. You keep having this series of move, and while this was happening, you will realize that here is a typical case of a divergence. So this is a divergence. and you can see what happened afterwards. Price move and closes below the moving average. You can see the close of price. It pulls back to your closes below the middle Bollinger Band, pulled back again to the moving average, and it was rejected. Carry your trend line again and let your trend line be your guide. So you can see. And however, the fact that price break your trend line is not a buying opportunity yet. For you to begin to buy, price need to break across this middle Bollinger Band. If this is the only thing you do, you will still be profitable. Anytime you get a resisted price being resisted from the upper Bollinger Band, the next point of interest is your middle Bollinger Band. It can give you a continuation entry for a buy. And if you break towards it, your next target should be the lower Bollinger Band. This thing is provable and it works on all assets. Look at this scenario. This is a typical volatility 75. Price left this zone, hit it up from here, and look at it to the middle Bollinger Band, break towards it. The next movement is to this zone, and now it break this zone and to where? To the upper Bollinger Band. Came back, retest it. So this should be your entry. All of this, price break it, there is no retest here. So you don't have an entry, provided you don't have any retest on this middle Bollinger Band. Price went up here, and of course, here gave us a divergence. But if you are a beginner, you don't really know what you are doing, you don't need to take this reversal. All you need to do, take your continuation trade. Price is still above the middle Bollinger Band, and as such, there will be a pull to the upside. And look at all of this candle scenario, this rejection. Look at your CCI, and this would have been your perfect entry. Very much simple and straightforward. You are scalping, by now you should be off. Look at crash 500. Price left. Price is now the middle Bollinger Band, so break to it, retest it, and price is pushing to the upside. This is an update. I want you to backtest the subsequent video in detail how you can take advantage of this. I believe you have learned something. Don't forget to like, share, subscribe, turn on your notification bell so you'll be the first to get notified when we upload the next video. Registration is still very much ongoing for our upcoming trading course, which will be starting this weekend. Find the link, and to free signal, there is a link in the comment section of this video.